Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 16th of June. All right, now some big moves through the European North American sessions, a big dollar clean out now. This is probably a little bit of a compounded event following the FOMC. Okay, it can take a day for everyone to sort of work out what's going on. And this is where the ECB have chimed in. They've raised interest rates by 0.25%, which was as expected. But I think most of the market was expecting them to go, we'll wait and see from here. But they've signaled they've raised their 2025 inflation forecasts. They're expecting higher inflation. Markets factored in another 0.25 in July, and that's really got the market moving, right? So you got to. I know the Fed have sort of come out and said, we're going to raise rates, but that's still a big uncertainty. The ECB, well, they're on a bit of a different track now. Still a hiking cycle, whereas the Fed maybe one last hike, and that could be it, if anything, right? So we're seeing a bit of a shift in the global markets. Now, let me tell you what this does for us, because it creates a lot of trading opportunities coming forward right now. Just for the global markets, obviously the dollar index lower, and you can see the euro. Now, for traders who aren't familiar with the dollar index, okay, euro is 58% of the basket. So if euro has a big move, generally the dollar index does, and vice versa. Gold is just starting to dribble a little bit lower, and oil sort of picking itself up off the floor after hitting a low down at 67 a few days ago, last week, back up towards that resistance line. Now, equity markets, pretty happy, right? They aren't really sort of too concerned, about the Fed saying they're going to raise interest rates. If anything, it's, as I was saying, it's like the Fed are trying to talk to the general public. Stop spending, stop doing stuff, right? Whereas the professional market are going, you know what? I don't think you're raising interest rates anymore, but we'll have to wait and see. Crypto is sort of whipping around, but they are sort of trending a little bit down at this point. Now, the currencies, this is where you've got to get a little bit smart about what you're doing. Now, I didn't actually even focus on the ECB. I thought they would raise rates. I didn't think there'd be much in it. And you come out and you see the unexpected, obviously with the press conference, everything, it's a multi-tiered event. But they are signaling, okay, it's time for us to act and get things moving. Now, we did have very strong Aussie employment numbers yesterday. Now, at the time, there was a risk-off sentiment in the market, so it didn't really go anywhere. It took the ECB meeting to get these things moving. Now, why I'm focusing on this is it's the first time in a long time Euro, Sterling, Aussie, Kiwi are all behaving exactly in tandem like they should, right? This is got to build confidence for you, right? The dollar, okay, the dollar index obviously lower. Dollar yen's come back a fair way. Dollar Swiss drilled, as was dollar CAD. So we have got uniform behavior across the majors. This is very good for us, right? It enables us to attack the market. The guys in the banks, when they see these sort of setups, they get more confident. They start to bring out more risk and look for good trading opportunities. Now, so that's one thing, right? And you look at this, these are all hourly charts, right? This is where you're doing your sort of trading from, but you're like, okay, well, this is great. I mean, we've seen the move and you're saying it's all consistent. That's super, but what do we do from here? Well, this is where you've got to get a little bit more creative, okay, or understanding. Now, I think these moves are a big flush out of stale positions, right? And we are seeing strong UK data, strong Aussie data. The Kiwis, well, they went technically into a recession yesterday, but don't forget the Kiwi follows other currencies, in particular the Aussie. So technically, yeah, it's in recession, but you know what? Everything's still sort of moving along quite nicely. So don't get sort of too baffled around what's going on. I expect these instruments to be sort of continue higher for the short term, but it is a flush out. What you need to do is come over to your daily charts. I've got a different template for this. And have a look here. None of these instruments have broken out of very long-term levels, right? Euro, we've got a really good, strong technical level up here. Oh, if anything, sterling sort of broke through 126, but the real big last level is up around 132. Gives sterling a huge amount of room to the top side. Aussie's coming up to a big level, and you've got a bit of a way to go there for the Kiwi. And dollar Swiss, well, you could say it's sort of broken down through 90, the figure, but there is a trend line lower. Dollar CAD's got one just below. Dollar yen's the odd one out. And the dollar index, another trend line there. So we've got daily trend lines in play. I would suspect these are going to hold unless we get some really big dramatic news. And this is where you start to factor in what's actually coming out today. You got to factor in the fundamentals, and there's not a hell of a lot coming through. Bullard is speaking now. He's like, can be left of center. The BOJ interest rate decision, okay, no change expected. But you know what? I don't think it's any time for the BOJ to be doing anything. They don't really need to do too much. If anything, the yen is becoming a little bit more competitive where it is, right? And if I just come across here to the yen crosses, you know, you'll see some of the headline stuff, euro yen at 15-year highs or some rubbish. But dollar yen has left the building against most of these crosses, okay? It's not just euro yen. If you have a look here, I mean, this is the carry trade. If you want to know what it is, it's about interest rate differentials, right? Interest rates in Japan, minus 0.1, have been for like 30 years. And now we've got all these countries, Australia, UK, Europe, Canada even, Kiwis not so much, although their interest rates are already high. They're all sort of looking to raise interest rates. The US is at the end of their cycle. And so the yen being a completely neutral instrument, negative rates, the interest rate differential play is in play big time, right? But you know what? This is already in play. It's easy to locate it now. What we want to do is you know, you're trying to pick this thing off. You're almost looking for it to turn around the other way. So it's a little bit tricky from there. But coming back to the daily charts, what you need to be doing is isolating where are these big levels, and now can we sort of start to piece together the fundamental data that's coming out? Can we actually start to put this into play and make it work for us? Now, what I mean by that is, okay, if I get up the calendar again, trying to sort of match up. We are running out of time, right? We've got the end of the week coming up. Wholesale sales in Canada, I'll be looking at that. You've got a bunch of inflation numbers out of the Eurozone. It's worth having a look at. The ECB's already given us the roadmap. Will these things change it? Don't think so. It's too it's so close to the actual meeting, but it'd be good to get some confirmation. And the University of Michigan consumer sentiment numbers, probably the last decent US number coming out, right? And where I was sort of coming back, if I just sort of scroll up a bit, coming back through the US numbers now, we had a bunch of US numbers coming out from the Philly Fed manufacturing numbers, the Empire State, the retail sales. Some of these numbers, it was a bit up and down, right? There was no sort of real consistency. Industrial production was a little bit weaker. Like it's the US economy, or the numbers are so balanced that there's no need for the Fed to be raising rates, right? And I think there's going to be repositioning across fund managers into euro, a weaker dollar overall, as these other instruments come into play. Now, with the change here, what it means is, this is the first time in a long time I've said this, the fundamental data that you see on the calendars, especially the high impacting numbers, these are going to take on a new lease of life, right? The US dollar is going to go into its own little shell, right? We sort of like a neutral to lower US dollar. And this brings all the economic numbers out of all the different countries into play. Okay, Australia, New Zealand, Canada, Eurozone, Germany, UK, all these numbers will be in play big time. And you're going to start to see a lot more natural movement across the major currency pairs, right? And that's why you need to be analyzing the instruments long-term and also short-term, right? These are your hourly charts for the same instruments. They look completely different, right? This is where you're doing your trading and everything looks like gangbusters. And then you switch over to the daily chart to get the full picture, right? And that's where you're making decisions around, okay, is this big trend here? Like if you just come to Euro, for example, you look at Euro and you go, yeah, what's going on here? Well, if we see a shift here and it breaks consistently through here, you probably want to get above these highs here at 111. The next level on the top side is 118, right? This is what I'm talking about. I'd love to see some massive weakness in the US dollar because that will realize these moves. And if you're looking across all these instruments, okay, especially Euro, Sterling, Aussie, Kiwi, you're going to start to see some scope here for some bigger long-term moves. And Aussie, you know, if Euro's heading towards 118, Aussie up to 76, it'll happen pretty quickly, right? So this is why you have to start planning now and get rid of that trend line. And you want to start reorganizing your charts, to make sure you know where the big shifts in momentum will come from. As you can see here on sterling, I was probably talking about this earlier in the week. You've got this trend line here, and it's had multiple hits, right? It was a bit of dicey price action around that 126 the figure. Okay, broke through, came back down, and all of a sudden we're 2 cents higher. And this is what you're going to expect as we go forward. You're going to see these moves shift pretty quickly. Now, coming into the end of the week, you've got to expect, if I just come back to the hourly charts, expect some sort of profit taking as we come to the weekend. I mean, these are really good moves. And the fact I like them is, see how it's moved and it's stopped. It hasn't retraced, right? So the market is like, yeah, we want some, and we're going to be looking for some more. Okay, so there's been no retracement on these, which tells me that these are moves. These are real moves. Okay, they're not just a fly in the pan, which we've been seeing over a number of months, where we see, you know, these short-term spikes up in euro, and the next thing you know, it's down at 107. This looks more like a confirmation that the moves are on. Now, that doesn't mean we won't see slight pullbacks in these instruments, okay, especially leading into the weekends where there's event risk over the weekends. But the overall shape for me is longer term, a weaker dollar across the board. And that gives these instruments, as I said, the central banks are raising rates and talking about higher inflation. They are 6 to 9 months behind the US at least. So now they're starting to get active. And I think you'll start to see some bigger moves going forward. And that, as I said, it brings in the data. We're going to see some cleaner moves, more consistent trending, and that's going to be better for us in the longer term. All right. So as it is, and just look for your sort of market sort of telltale signs around what's going on. Now, you might be sort of thinking US equity futures, right? They're sort of opening up and just drifting lower. Is that creating a risk-off environment? Not really, because when you start to see the US equity markets going up during the Asian session, it's not uncommon for them to just have a bit of a, like it's like a pressure valve released. They sort of drift a bit lower. Are these instruments going down? No, they're not, right? So there's not, we're entering a different phase with the risk-on, risk-off sentiment. I think today, maybe some profit taking into the weekend, but weaker dollar going forward. And that's all she wrote. That's it, man. All I'm trying to tell you is exactly what I can see and what I can do. I mean, I've been doing this trading for 35 years. So this is how things happen. And all of a sudden it can become very clear around what's happening in the market. And that's what you need to be prepared for. If anything, I'm sort of like half a day behind the move, but it doesn't stop me getting into it. If you want to check out some more, come into the Traders for Traders Discord. You can sort of join the conversation and we'll find out a bit more about what's going on. All right, guys, that's it for me. All the best. Now, not a lot of data coming out, but plenty to get prepared for next week. The Bank of England coming out as well, 0.25% already forecast there. So we'll see how that plays out next week. But yeah, just get your charts tuned up. Start thinking more medium to longer term opportunities, where you can get in, where you can get out. And that's how you're going to sort of start building some capital in your account. The good thing is I'm expecting more consistent markets, and that's going to be better trading for all of us. All right, guys, have a good day or a good weekend. Cheerio.